When an executive of Goldman Sachs has resigned in protest of the financial giant's recent directions and priority, and says it all in his letter to the New York Times. Greg Smith said in his letter to the paper, he believes he has worked here long enough to understand the trajectory of its culture, its people, and the identity. And he can honestly said that the environment now is as toxic and destructive as he has ever seen. He described the problem that presently the interests of clients are continued to be sidelined to make way for the firm's agenda to continue to make money. He said contrary to public skepticisms, culture was a vital element of the firm's success. Teamwork, integrity, humility, and service to clients were the key for the firm's success and trust for 143 years. Goldman Sachs had lost its direction, and he cannot identify to what it stands for now. His career highlights him advising 2 of the largest hedge funds in the world, becoming 1 in 5 of the top asset managers as well as 3 of the most sovereign wealth funds in the Middle East and Asia, with his clients having a total asset base of more than $1 trillion. He said Goldman Sachs' downfall to petty profiteering was the leadership. Doing the right thing was not as preferred as making money. Persuasion to invest in stocks and products that the firm wants to get rid of, which will result in promotion to a position of influence. He said every second the meetings of the leaders today at Goldman Sachs are not on how to help clients, but how to make the most money off them instead. He said clients are even referred to as Muppets, sometimes over internal emails. Well, Greg said the mindset today projects 10 years from now how bad the next generation of the firm personnel will be, saying, you don't have to be a rocket scientist to figure out that the junior analyst sitting quietly in the corner of the room hearing about Muppets, ripping eyeballs out and getting paid doesn't exactly turn into a model citizen. He hopes his resignation and the letter will be a wake-up call to the board of directors to get the culture back on its right track, or else this firm will not be sustained for much longer. Greg Smith resigns today as a Goldman Sachs executive director and head of the firm's United States equity derivatives business in Europe, the Middle East, and Africa.
Well, there was a pretty bold statement by Greg Smith, and in retaliate, just nearly immediately, Kun Prasarn, Goldman Sachs boss has rejected claims by a former employee that his environment is toxic as well as destructive. Lloyd Blakefield said his views did not reflect the banking giant's views. Greg Smith, who headed Goldman's equity derivatives business in Europe, wrote to the New York Times saying it was common to hear talk of ripping off their Muppet clients. Blankfield said in the email that it was not shocking that some people could feel disgruntled within a firm employing 30,000 people, but it was unfortunate he expressed his views through a newspaper. He added that he was not aware Smith had expressed his misgivings within the anonymous mechanism provided by the firm. The firm said earlier, in our view, we will only be successful if our clients are successful. This fundamental truth lies at the heart of how we conduct ourselves. Following the financial crisis, Goldman was among those bailed out by the United States taxpayer and came under fire for its business practices, including accusations that it helped Greece hide some of its massive debts. The Securities and Exchange Commission, or the SEC, opened a fraud investigation in 2010 over the marketing of mortgage investments as the U.S. housing market faltered. These featured emails from trader Fabrice Torer saying that the entire system is about to crumble at any moment in 2007. Goldman Sachs agreed to pay $550 million to settle civil fraud charges of misleading investors in 2010, the biggest fine for a bank in the Securities and Exchange Commission's history. Goldman Sachs was also fined £17.5 million by the UK's financial regulator, the Financial Services Authority, for failing to tell it that the bank was being investigated by the SEC.
Back to the local news, where the Association of Interprovincial Bus Operators will postpone an increase of bus fares pending state-owned transport codes, the bid to seek government approval on a hike to reflect the higher fuel costs. Earlier, Sujinda Chachai, president of the association, said private bus operators would go ahead with the fare hike on April 1st. The plan was, however, suspended after Transport Co. said it will also join private operators in such a move. The government has floated oil and gas prices since the start of the year to reduce the burden on state subsidies, which has gone up due to higher global oil prices. As a result, the petrol price has approached 40 baht per liter, while the diesel price has risen from less than 30 to 32 baht per liter. In addition, the price of natural gas has risen from 8.5 baht to 9.5 per kilo as the government aims to increase gas prices every month to 14.5 baht per kilo at the end of the year. Liquefied petroleum gas, or LPG, has also been floated to reduce the government subsidies. As a result, public bus and taxi cabs have sought a fare hike to offset higher fuel costs.
Well, Kun Prasarn, the Bank of Thailand's governor, Kun Prasarn, Trayat Warakul, has insisted that the policy rate would remain unchanged at this moment, despite the oil spikes, which has caused a lot of worry in the community right now.
Right.
As well, he said that the inflation would not exceed the central bank's target, despite the forecast that the Dubai crude oil would average above $140 per barrel this year. The MPC said, the MPC would convene for the second time this year on March the 21st. It is widely expected to revise up the economic growth forecast for this year, after the National Economic and Social Development Board raised the projection to 5.5 to 6.5% due mainly to post-flood investment. Meanwhile, Prasarn showed his concern on the ballooning public debt after the cabinet yesterday approved the 800 billion baht borrowing, which would boost the public debt ratio to 48.6% of GDP. Should the public debt increase at this pace for 6 to 7 years, the ratio would hit 60% threshold.
Well, from monitoring the figures in December and January, we are quite confident that the recovery from the flood is quite satisfactory, judging from our other economic indicators. And the output gap that has been caused by the flood now becoming narrowing. We do expect that this output gap will close again sometime in the third quarter.
So overall, the growth rate will be?
The growth rate will be quite healthy. In fact, the Bank of Thailand's figure in January of 4.9% for the whole year of 2012 is likely to be revised up by even up to 1 full percentage point.
Because the government projection is quite optimistic at 7%.
We may not go as high as that at that level, but 6 would be a working figure. We are waiting for our reconfirmation, and probably end of next month we will come up with the revision. Very likely that it will come close to 6 for the whole year. At this point, in fact, the present 3% policy rate is quite accommodative already. Bearing in mind that our headline inflation at the moment is around 3% plus. So in fact, we are in the negative territory of the real rate. So at 3%, I think it's quite accommodative already. Well, it's our duty to watching the proper balance in the economy, the proper liquidity. The government certainly are now equipped with the fiscal space to restore the confidence and to help supporting restoration, reparation, and what is necessary. Now, in practice, this thing won't come in a day or a few days. It will go through procedures, planning, project drawing, approval, and so on. So we do hope that it will come gradually. Although in the longer term, it's our wish to see that all stakeholders will take into account the sustainability of the fiscal position of the country.
Well, Fitch Ratings says Thailand's fast-growing money market fund, or MMF, industry since 2007 highlights the increasing importance of MMF ratings to market participants. At the Value of Fund and Asset Management Ratings Conference in Bangkok, Fitch Ratings included a panel discussion on characteristics of good asset managers. Vincent Milton, Managing Director of Fitch Ratings Thailand Limited, Providence, the opening address and gave comment on the trend of Thai MMF after flood crisis last year.
Well, I think we saw a very sharp decline in GDP in the fourth quarter, which I think was expected. I mean, there was significant disruption in the major industrial centre and population centre of Thailand, so that wasn't unexpected. Fortunately, things look like they're recovering very quickly, and for most companies, that operational disruption was mainly only 2 or 3 months. For those obviously directly affected, it's probably going to be 6 to 12 months.
Fitch's MMF ratings provide an independent opinion and standardized measure of the fund's risk on capital preservation and liquidity. Regardless of its legal registration status or market positioning, a fund may not be rated as an MMF by Fitch if its investment guidelines are not consistent with the agency's criteria. Orawan Garoon Gonsakun, Senior Director in Fund and Asset Manager Ratings Structured Finance, said Thailand's MMF industry accounted for almost 1/5 of the fixed income mutual fund market at end 2011. She highlighted the growing importance of MMF ratings that the agency focuses its analysis on the capability of the fund to preserve principal and provide liquidity to investors. All Fitch-rated MMFs are subject to ongoing surveillance. Key rating considerations in assessing MMFs include a review of the fund's investment policy and portfolio holding regarding credit, market, and liquidity risks, as well as the capabilities of its asset manager and sponsor.